I would like to extend a warm welcome to all audit team members. Today's topic is the development of the audit program. As we have seen, the item I have chosen is inventories under the asset sections in the balance sheet. I chose this item because it is an essential item for this company. The Warehouse Group is New Zealand's largest retail corporation. As a result, the firm primarily operates and generates money by selling items from its inventory. The balance statement shows that the value of inventories accounts for about 66% of total current assets. The worth is not just high in recent years, but it has always been high. This demonstrates that inventories will have a substantial influence on the company. As we can see from the inventory remark, inventories consist of retail stock and commodities en route from overseas. We feel that the inherent and controlled risks associated with inventories, which were previously described in the first section, would eventually substantially impact the organization, such as inventory mismanagement and theft. Following a preliminary evaluation of the risk of material misstatement, two relevant techniques can be pursued: a substantive approach and a lower evaluated degree of control risk. The first technique, used in circumstances of medium to high control risk, offers direct proof of the occurrence of substantial misstatement. The second technique involves conducting a control test to assess the efficacy of controls in detecting and correcting significant misstatements. This method is used when the control risk is low to medium. Based on the risk assessment in Part 1, I concluded that the combination strategy was the best option. It employs both techniques, employing both substantive process and control testing. This method is less expensive since it allows for a decrease in the number of substantive processes. Analytical approaches may be sufficient if a relatively high degree of detection risk is acceptable. Analytical techniques are favored because they are less expensive to undertake than detailed testing, and evidence will have previously been gathered through control tests that justify the greater degree of detection risk. Program of specific procedures. Inventory audit is the practice of comparing a company's actual inventory levels to financial records in order to assure correct inventory accounting. It may be as easy as counting physical stock levels and cross-referencing them with records. This is done to ensure that the number in the system match the number in your actual stock, counting each item. Product barcodes and technologies such as inventory barcode scanners can assist in keeping track electronically. However, physical counts are not only time-consuming but also exceedingly disturbing. In most circumstances, activities must be temporarily halted. No merchandise may enter or depart the warehouse while the count is being performed, which might take several days to a week or more. The second phase involves evaluating inventory-related documented evidence. The audit team may supervise the matching of bills to shipment and reconciliation of goods. An auditor may randomly check invoices to ensure they match the number of items and cost of merchandise sent from your e-commerce warehouse. This procedure aids in ensuring that the correct amount was charged to the correct consumer at the correct time. Reconciling items might be due to inconsistencies discovered during auditing. To establish the fundamental cause, a reconciling items inquiry may be conducted. It will be easier for the audit team to keep track of and monitor particular error prone in the future. The third procedure involves supervising the process of evaluating expired or damaged goods. Obsolete inventory must be recognized in order for the corporations to determine how much of its inventory investment is worthless. The most straightforward technique to detect obsolete inventory without a computer system is to place physical inventory counts on all inventory items once the annual physical count is completed. The tax affixed to any objects used the next year will be discarded at usage, leaving only the oldest unused items labeled at the end of the year. The complete procedure may be checked at the warehouse to ensure that it was carried out without undue personal interest. As a conclusion, inventory is regarded as one of the warehouse group's most critical commodities. Any misrepresentation of the items will undoubtedly influence the organization team regardless of the size. As a result, it is critical for the audit team to thoroughly examine the account associated with this item to avoid any misstatements, fraud, or omissions which may be accomplished utilizing the three specific procedures. Thank you.